Welcome to Medicare School Daily, where we help you understand Medicare, save money, avoid mistakes, and above all else, get the most out of your Medicare benefits. Today's topic is how to understand and appeal Medicare IRMAA. There are many of you that are watching this today that would be considered high income by Medicare, and you're going to have to deal with this whole issue of IRMAAs. IRMAA stands for Income-Related Monthly Adjusted Amount. So it's an acronym that applies to those that have high income. And I'm going to show you today in this video how you can appeal the IRMAA if indeed you are assessed one. And so first off, let's deal with going on to Medicare. You're going to notice that as you get involved in the Medicare system, there are actually four major parts to Medicare. Medicare A is pretty much everything that would be related to what we would say would be inpatient services. B is pretty much everything outpatient services, as well as all the doctor services that you would receive. C plans are called Advantage plans, and D plans are prescription drug plans. All right, so those are the four major parts of Medicare. And there's only one of these four that actually is zero premium, and that would be the A of Medicare. As long as someone has paid into the Medicare tax system for at least 40 quarters, which is 10 years worth of work, then there will be no premium assessed to you for Medicare A. But folks, everything else is going to carry a premium. Now, what happens with the B of Medicare, this is actually comes out of your Social Security check, or they bill you for this quarterly, but the monthly amount this year in 2020 is $140.60. The C plans, those are called Advantage plans, they range in premium anywhere from about $0 to $49 a month, depending upon what plan you're on. And then drug plans range anywhere from about $13 to about $79 a month, depending on the plan that you're with. So these are the premiums that are associated with these different parts of Medicare. Now watch this. 93% of the Medicare population pays what we call the base premium. Base premium. That means these premiums that are attached to these particular plans. But 7% of the Medicare population is going to have to pay an IRMAA. Again, this income-related monthly adjusted amount, this surcharge that is added because of your high income. So I'm going to show you how IRMAAs are calculated. So IRMAAs are going to be based upon our income. And if I'm starting Medicare in 2020, the income that they're going to look at is 2018. So we apply for Medicare. Medicare notifies the IRS that you're going on Medicare, and the IRS will look up 2018 numbers and get those back to Medicare to determine whether you have an IRMAA or not. And so again, if I'm starting in 2020, they're going to look at 2018, and the number they're looking at is called our modified adjusted gross income. So our adjusted gross income is then modified by adding back in tax-free interest income. So if you're an investor in municipal bonds, you don't pay federal taxes on those, but you do report that number on your return. And so your tax-free interest income, the line from that on your return, is added to your AGI. That becomes your modified adjusted gross income that will determine whether you have an IRMAA or not. So they always look back 2 years. So if I'm starting in 2020, they're looking at 18. If I'm going to start in 2021, they're going to look back at 19. So every 2 years they look back. And so you're going to notice we have a schedule here based upon whether you're a single person, you file an individual return, or a couple, and you file a joint return. And so if our income, modified adjusted gross, is $87,000 or less, I just pay the base premium. This is what I was saying earlier, 93% of all people would pay $144.60. If I'm a married couple and we have $174,000 or less, each of us would pay $144.60 for our Part B. And then we have a drug plan, and we only have to pay whatever that drug plan is charging for that plan. There's nothing added to it. So at these income levels, I'm going to stay right here on that line. Now again, that's 93% of you. But 7% of you are going to be considered high income. Now we're going to look at the whole chart, but let's just take as our example this line right here. So let's just say you're an individual single person and you make $130,000 a year modified adjusted gross, or a couple, let's call it $230,000 a year. And so if that's your income level, you're going to have an IRMAA, and then IRMAA amount this year is $144.60, exactly double what the base is. So for your B, you're not going to pay $144.60. You got an IRMAA attached to it, so your B is going to cost you $289.20. If you're married, each of you would pay that amount. But then also notice your high income affects what you're going to have to pay for your Part D plan. They're going to add to that as well. And so at these income levels, they would add $31.50. So someone at this income level, whether it's single or a married couple, is going to pay an extra $175 every month for their Part B and their Part D IRMAAs, these additional surcharges. And so it is common for people to be paying these amounts, but then sometimes people will retire or they've had a life-changing event and these numbers no longer really reflect the reality of their income, and so then they can appeal the IRMAA. So let me show you how you can appeal your IRMAA and possibly drop off these IRMAA charges. Now, in order to appeal the IRMAA, we have to have a qualifying life-changing event. And there are 8 of them, and folks, only 8. And these are the criteria where Medicare says if you have one of these life-changing events that qualifies, they will consider dropping off the IRMAAs, and this is the appeal process. Now, there's 8 of them. I'm not going to go all in them because of the sake of time, but the most common would be work stoppage. That means you have retired, or work reduction, maybe you have semi-retired. And so what you're saying is no longer look back 2 years, I've had a life-changing event, and I want to give you a different tax year. And so if it's 2020 and they're looking back at 18, what we can do is we can project for 2020, we can give them our income. So we have to first off give them the date we had this life-changing event. So let's say it's 7/1/2020. And let's say that if they're looking back at 18, a married couple, and they see on our numbers $230,000. If they look at $230,000, they're going to charge us an IRMAA. But if we give them 2020, let's say that income has come down and now it's just $160,000. Remember, folks, anything below $174,000, now you can appeal it. So they look at the $160,000, and let's say we don't invest in municipal bonds, so we have no tax exempt interest. So we'd put a 0 there, and we're married, so we would let them know we filed jointly. And now they're not looking back 2 years, they're actually going to look back and they're going to look forward at 2020. And so as long as we're accurate in this number, what's going to happen in this situation is you will win your appeal. They will process this and they will drop off your IRMAA charges, so you'll no longer have to pay extra for your B or for your drug plans. All right, so this is something that some of you are going to need help with. We understand that. And one of the services that we provide with our companies will help you appeal the IRMAA so that you can successfully win this and get those IRMAA charges dropped off. To learn more, watch the related video or check out our most recent video. Also, be sure you click to subscribe for free and get notified every time we post a new video. To watch our complete Medicare workshop, go to MedicareSchool.com. And finally, when you're ready to compare all your insurance options and get free enrollment help from one of our Medicare School guides, call the number on the screen. See you next time.